Wow, that was quite an announcement yesterday from Meta, aka also known as Facebook, and Microsoft. The market loved it so much that it boosted Microsoft's market value by over $100 billion as the stock rose 4%. The reaction from Meta stock was muted, the stock didn't do anything. So, what to do? Is it time to buy Microsoft or Facebook? Now, I had called Meta shares a great buy back in November 2022. And I shared this on my Tech Investors podcast. The shares were trading at about $90, and now they're trading at $312. And that's a profit of over 250% in less than a year. And Microsoft, I recently added to the portfolio and then I sold it. I see it becoming a good dominant player in the AI space. But let me tell you what this Meta Microsoft partnership means and how I'm playing it. My name is Suhail Ahmad and you're watching my vlog, Diary of an Investor, in which I share investment ideas, insights, interviews to help create wealth and prosperity for you and your family. So thank you so much for watching, and do please subscribe as well. So let's jump right into this big Meta Microsoft partnership and what it means. So yesterday, Mark Zuckerberg announced that Meta plans to open source Llama 2 in collaboration with Microsoft. Now this announcement holds major implications, and there's 3 key points I will raise and bring to your attention. 1, this could potentially kill a lot of the LLM startups like Mosaic and Red Pajama, and even the recent acquisition of Mosaic ML could be in jeopardy. Why? Because essentially what these startups were promising to do, Microsoft will be able to do it, and probably for a lot less money. Second, Meta has entered the AI game with this and is going head to head with ChatGPT and is going to be able to provide this amazing data set and position itself strongly in the AI arms race. And the market is still uncertain of the financial impact that this will have on Facebook, and that's why the stock didn't move much yesterday. But this is definitely good for the company in the long run, and they will figure out how to monetize this. So again, Facebook, Meta is in the race. And the third key implication, I think, which is the most important, is for Microsoft. This positions Microsoft to become the godfather of AI because it now has exclusive ties to OpenAI and Meta, plus it has priority access to NVIDIA chips. And then it also owns its repositories and distribution channels such as GitHub, Azure, and of course Office 365. So it can easily get its AI solutions on the desktops of clients worldwide. So it's no surprise Microsoft jumped yesterday on this news, because this is solidifying its position. And it could actually, in terms of valuation, Microsoft stock is not cheap, right? It's trading at a forward price earnings ratio of 32 and a price to sales ratio of over 12. And it's risen 50% year to date. Meta is not as expensive as Microsoft. It's got a forward price to earnings ratio of 21, a price to sales ratio of 7. But considering it's up 160% over the past 6 months, year to date, it doesn't get me really excited to jump into it at this time. I feel that Microsoft and both Facebook are uptrending, right? They're moving, they're doing well. I've sold both of my positions, both in Meta and Microsoft. Perhaps I took my Microsoft position off too early. But, my concern is that we've had these massive moves. And what I'm suggesting to some of my clients and partners is that if you have these positions in Meta Microsoft, you don't necessarily need to be as aggressive and proactive as I am. But what you can do is you can reduce your positions and look for a pullback to add back to your position. So that way you can take some profits, and not necessarily, particularly if you've owned, let's say Meta, and you bought it, at the beginning of the year, you've had this huge gain in it. It's probably become a bit larger than you would like position within your portfolio, right? So you want to always be not too concentrated. And I like to hold a position of about 20 to 30 companies in my equity portfolio, in kind of the large cap portfolio. And what I find is that the best way to manage your risk is to manage your position sizes, right? So what I do is I have essentially a equity large cap portfolio. I have a venture portfolio, and then I have more like an income and a yield portfolio. So I have kind of these three portfolios. So one, growth. This is where Microsoft and Meta would fall into the growth portfolio. And I'm looking for growth at a reasonable price, right? So I'm not necessarily hunting for deep value. I'm looking for growth, and I'm willing to pay a reasonable price for it. Then my venture portfolio is looking at investing in private venture companies, which I'm not doing so much as I used to, because I'm finding really good opportunities in the public market. So I'm investing in venture stage companies, which would still qualify as startup companies, but they are publicly traded. And it gives me a lot of insights. It gives me access to management, to financials, and to data and information I need to make a better and more informed decision, right? So these are those 10x, the 10 baggers I'm hunting for. And then I have my income portfolio, right? And in the income portfolio, this is where I'm looking at investing in a way that our principal is protected and we're able to generate a reasonable income while securing our principal, right? And then I balance the three portfolios, the allocation to the three portfolios based on the market risk. So now when it comes to Microsoft and Meta, both of these companies are in a good uptrend, okay? But I'm not running in to add to these positions. I've actually rotated out of a lot of the tech stocks into energy and consumer discretionary. Plus, one of the other concerns I have, which I want to see how it kind of balances out, the NASDAQ 100 index is going to be rebalanced this Friday, July the 21st. And that means they are looking at reducing the exposure of these magnificent seven, or these big tech names such as Meta and Apple and Microsoft, from approximately 60% down to 40%. So that means a lot of ETFs are going to have to sell tens of billions dollars worth of stock, and there's going to be an adjustment period. So I'm going to let it sit out on the side and wait to see how this happens. And I am expecting a pullback over the summer. I'm expecting maybe not a correction, but at least a pause in the rally, some digestion, particularly from the tech names. And then, if I've got a 5-year time horizon for my growth portfolio, then definitely I want Microsoft in my portfolio. I want Meta in my portfolio. I want Apple in my portfolio. Google, I'm not too sure. I'll do a separate episode or a post on Google, because I think Google is in trouble, relatively speaking. So I don't see it as a great buy. I think they still have some proof and validation of BARD and how their business model is going to evolve, because I don't want to see ads. I'm using less Google. I'm barely using Google. I'm using ChatGPT, or I'm using Bing, using the AI features to ask questions. So I'm not having to see any ads. So I don't know how Google is going to monetize this. And until they do so, and I have a bit more clarity, I don't think I want to be in that stock. Because any stock, any company that you buy today, you want to ask yourself, is this a company I would still want to own 5 years from now? Because that means that the company will progress and it will be a better business 5 years from now. And that's what's going to cause the share price and the stock price of that company to increase in value. All right. So I hope you found this valuable. I've got to get back to my day job, but thank you so much for watching. And please do subscribe. Do leave me your comments and questions. Love to hear from you, and I will do my best to answer them for you. Thank you. God bless, and have a wonderful day.